friends, thanks for watching many videos and thanks for giving positive comments, and really that makes a great impact for me to deliver more and more and to give more and more classes and benefits to the students at large. And we have not discussed three concepts, and those three concepts we are going to discuss now one by one. First, to start with, I have not covered appeals and advance ruling, so that we will be discussing later. In this video, we will be discussing about revision lecture number 11, that is refund under GST. And we have also left with the foreign trade policy, even that also I will be discussing later. Now, let's start with refund under GST. See, this particular refund chapter is not that important for May 20. Of course, now it is August 20, because already for November 19 attempt, they have given one question on refunds. So I don't think so that this area will be repeated, but nevertheless, we cannot prepare that way. So therefore, we need to learn about the concept. But I am not beating around the bush. I am directly going into the nitty-gritties of refund, whatever is required from your exam point of view. First, we'll start with an illustration. What is that illustration? You can look into that illustration in That's It book, page number 108. So this is revision lecture number 11, page number 108. With that, I am starting. So have a look into this illustration. You can see there multiple parties involved in a transaction. And because I am watching too much of cartoons now along with my kids, so therefore these characters are there. And one of my favorite cartoon is this Motu Patlu, and therefore I have taken that. There is one person, Mr. Singham. I am starting with that. A dealer in Maharashtra. Mr. Singham, a dealer in Maharashtra, who is making supply of goods to Mr. Motu in Tamil Nadu. So it's an interstate supply for Mr. Singham, and therefore it is chargeable to IGST. That's a simple transaction. Who is Mr. Motu? He is just a dealer in Tamil Nadu. So therefore that's a simple interstate transaction. And what the recipient can do, he can take ITC with respect to IGST paid. So therefore ITC equals to rupees 1000, IGST whatever is paid. So Mr. Singham will be charging 10,000 rupees plus 1000 rupees. So that 1000 rupees can be taken as ITC by Mr. Motu. Now, Mr. Motu is making supply to Mr. Patlu, who is an exporter located in Karnataka. So therefore, supply is made to an exporter. This will qualify as deemed exports, supply to an exporter. So later we will see in detail, but I'm just telling you, supply to an exporter will come under deemed exports. So in case of deemed exports, what are the benefits available under GST? What is deemed export? We are not discussing in detail what transactions constitute deemed exports, but we are just trying to analyze as to that whenever I am a dealer, I am making supply to an exporter. For me, it is deemed export. And what are the benefits available under GST in case of deemed exports? The objective, try to remember, the tax incidence should be zero. The tax incidence should be zero, which means when I am a deemed exporter, when I make supply to one exporter, now I have two options. Option number one, I can recover only the sale price excluding GST. So I will not be recovering GST. Therefore, Motu in our example will recover only the sale price of 12,000 from Patlu. He will not collect any GST. But Motu has to pay GST or not? He need to pay GST. He will not recover GST from the recipient, but Motu has to pay GST. And in this transactions, we assume 10% as a rate of GST. In all these transactions, we'll assume 10% as the rate of GST. What is the price at which Motu has sold to Patlu? 12,000. On the 12,000, 10%, 1,200 is the gross liability of Mr. Motu. Whether that 1,200 recovered from Patlu? No, it is not recovered from Patlu. And out of that 1,200, already Mr. Motu is having an input tax credit of 1,000, and he will use his electronic credit ledger for payment of 1,200. Balance 200 rupees he will pay out of his electronic cash ledger. Now, this 1,200 is a loss to him because he did not get it from the recipient. He paid out of his pocket. Now, the entire 1,200 will be given to him as a cash refund. What is the advantage here? That 1,000 ITC got converted into cash. That 1,000 ITC got converted into cash. 200 rupees he paid in cash, he is getting as a refund, whereas that 1,000, whatever he has used out of the credit ledger, so that he is getting back in the form of a cash refund. So that's the advantage here. So therefore 1,200 minus 1,200 he is paying, but he will get a refund of 1,200. So therefore the tax incidence on him is 0, and even Patlu, being an exporter, he is able to procure the material without payment of any GST on inward supply. There is no GST paid by Mr. Patlu on inward supply. So this is the benefit. Actually, this benefit is for whom? This benefit is not for Motu. This benefit is for Patlu only. Recipient, otherwise he need to bear the burden of 1,200, but that 1,200 he is not bearing the burden. So that's the advantage here in case of deemed export. So what is the first option? The person who is making deemed exports will not recover GST. So therefore the recipient will enjoy the purchase without payment of any GST, and that GST, whatever the supplier has paid using his cash ledger and credit ledger, he can claim as a refund. So that's the advantage. Now next, second option. Suppose if first option is not feasible, say cash flow constraint is there. Mr. Patlu is telling that I don't have enough cash to make payment. Maybe whatever money that is available with Mr. Patlu has been spent on eating samosa. Therefore, he is not having money. So then option 2, it is he will take money from Patlu. Motu will take money from Patlu, 1,200, and will pay that to government. So out of the 1,200, 1,000 using credit ledger, so recovered. Balance 200 using the cash ledger. Anyhow, he has the money, so he will pay. Now, in that case, what is the benefit that Patlu has got? Patlu has not got any benefit. So he can, whatever he paid as 1,200 as GST, whatever 1,200 he has paid as GST to Mr. Motu, he can get it as a refund. That's the story from Mr. Patlu perspective. So now Mr. Motu has two options. What are those two options? Recover the GST from the recipient, or don't recover. Option 1 is don't recover the GST from the recipient. Option 2, recover the GST from the recipient. In both cases, he need to pay GST. Whereas in option 1, he will get refund, and in option 2, he will not get refund because already he recovered 1,200 from the recipient. So that's about benefit in case of deemed export. So tax incidence on Motu will be 0. How tax incidence on Motu equals to 0? Which means nothing he is paying out of his pocket. Even if he pays, he is getting as a refund. Now Patlu has paid GST. Now what Patlu is doing, he is making exports to Mr. John, a foreign buyer. So this particular export of goods is chargeable to GST or is zero rated supply? Zero rated supply. Now there are three options available to Patlu. What are those three options? First, whether he paid GST or not on the inward supply, he did not pay. That is option 1 of Motu. Option 1 of Motu. Motu has not collected GST, so Patlu did not pay any GST, so leave it. Whereas option 2, Motu collected 1,200 from Patlu. Now Patlu has paid 1,200 on the inward supply. Now three options are available. Option 2A, 2B, 2C. What is option 2A? Whatever GST 1,200 you paid, you get it as a refund. So Patlu can get a refund of GST paid on inward supply without taking it as ITC. See that. get refund of 1200 without taking it as ITC, refund on account of deemed export. Supplier should not have claimed any refund, because option 1, if Motu claims any refund, which means that he has not collected it from Patlu. So Motu has not claimed any refund, which means what? Automatically it is option 2. So Patlu has paid and he need to get it as a refund. This is the benefit in case of deemed export. So it is covered. Now, what if he don't want to go for that option? So he wanted to take the ITC. Okay, let him enjoy the ITC. Let him enjoy the ITC. And he exports with payment of GST or without payment of GST. He exports with payment of GST or without payment of GST. If he exports with payment of GST, for payment of the GST, this ITC would have been adjusted. So Patlu is making export. There are two options available to the exporter if they want to take ITC. If they want to take ITC. Otherwise, yet another option is there. What is that? Don't take any ITC. Get it as immediate refund. Otherwise, if you want to take ITC, better take ITC. Better take ITC. After taking ITC, now that Mr. Patlu has got two more options. Already one option gone. Now two more options because they have taken ITC. What is that? Pay GST on export or don't pay any GST on export. If they pay GST on export, what will happen? If they pay GST on export, for payment of the GST, this ITC can be utilized, and whatever is the gross GST that they are paying, not net GST, gross GST they are paying, they will get it as a refund. That is option B. Avail 1200, option C. Avail 1200 as ITC, pay GST on outward supply. What is the outward supply value? 17,000. 17,000 into 10%, 1,700. For 1,700, 1,200 will be adjusted. So balance how much they will pay? Only 500 they will pay using their cash ledger. But how much refund they will be getting? Mr. Patlu will be getting entire 1,700 refund will be available to Mr. Patlu. Refund sanctioned by customs officer in case of goods. So this particular refund will not be sanctioned by the GST officer. This refund will be sanctioned by customs officer if it is goods. If it is services, that refund will be sanctioned by GST officer only. Next here. What is this B option? I want to take ITC, but I don't want to pay any GST on my outward supply. So we have that option also. No need to pay GST on export. Export without payment of GST under bond or letter of undertaking. Export without payment of GST under bond or letter of undertaking. In that case, whatever ITC that I have, which is unutilized, I will get as a refund. So Mr. Patlu will get as a refund of unutilized ITC. So look into option B. Avail 1,200 as ITC, don't pay any GST on outward supply and claim refund of ITC 1,200, and this refund is sanctioned by GST officer. In all these cases, there is no tax incidence on Mr. Patlu. Patlu's tax incidence will become zero. How tax incidence will become zero? Whatever they paid on purchases, they are getting it as a refund somehow. So which means this is the benefit available to the exporter under GST. But these benefits are in the form of refund mechanism. Now, this example, whenever you get a doubt, when you are reading refund in case of deemed exports or export, you refer to this illustration so that you will get a clarity of thought and then you can answer it easily, any type of question. Now, this is an introduction illustration, but we have not yet started with the refund. So this illustration, once you have understood, as we progress towards discussion of each and every particular refund mechanism, so that I will be connecting here so that you will get a clarity. And let's start with the subject now. So far also we have discussed subject only, but it is in the form of an illustration. Now we are going to discuss the detailed provisions of that. Revision 11, page number 101, refund in case of exports, deemed exports, etc. Now look into this. These are the 10 different refund mechanisms that is available under GST. So multiple refunds are there in GST and you can practice in only refund itself. So that much scope is there, and only problem is the department is not giving refund that fast. So therefore your clients will get frustrated and they will tell like you have not filed it properly. So it's not that way, and many times we will be filing our refunds properly money, but it takes time to get the refund. And what are the different ways in which a person can get refund? First, refund of IGST paid on export. So pay GST on export. So what we did? Option 2C, that is Patlu has exported. He paid 1,700 as GST, and that 1,700 he is getting as a refund. That is export on payment of GST, they will get refund. That is one refund. Refund of unutilized ITC, that is option 2B. What is that we discussed? Patlu paid 1,200, took it as ITC, and he did not pay any GST on outward supply, and that 1,200 he got as a refund. That is refund of unutilized ITC. Is that the only way, or is it the only situation where they will get refund of unutilized ITC? No. Even in case of inverted tax structure, there will be refund of unutilized ITC. What is inverted tax structure? The tax rate on my outward supply is less than the tax rate on my inward supply. That is, say I am purchasing some raw material which is taxable at 12% GST, and using that raw material I converted into a finished product, and that finished product is taxable at the rate of 5%. So that's known as inverted tax structure. In case of inverted tax structure, by default I will be having unutilized ITC because my GST rate on outward supply, see remember, it is not GST payable on outward supply is less than the GST paid on inward supply. Many times in exam you will be writing that. It's not that way. GST rate on, not paid on, GST rate on outward supply, rate. GST rate on outward supply is less than the GST rate on inward supply. So that is known as inverted tax structure. And in case of inverted tax structure also, whatever is unutilized ITC, we will get as a refund. So come on, what are the two refunds we have discussed so far? Number one, refund number one, that is refund of GST paid on exports. And number two, export in the sense zero rated supplies, even in case of supply to SEZ, that is also covered. Then refund of unutilized ITC. Number three, refund on account of deemed export. So we discussed either supplier can get the refund, or if supplier is not collecting, which case? That Motu selling to Patlu. Option 1, Motu has paid GST out of his pocket and he will get a refund, or Patlu will get refund. Option 2A, that is whatever GST he will pay to Motu, he will get it as a refund. That is refund in case of deemed exports. And this refund in case of deemed exports is really a benefit. Like, I don't have to take ITC. Whatever I have paid GST, immediately I will submit the application for refund and I will be getting it as a refund. Then number 4, refund of balance in electronic credit ledger. What is this? Sometimes when I have excess balance in electronic credit ledger, that is what unutilized ITC. But point number 4 is not electronic credit ledger, it is electronic cash ledger. Already we discussed refund of unutilized ITC, that is from electronic credit ledger. Now it is refund of excess balance in electronic cash ledger. What will happen? In order to avoid the cash outflow at a particular point of time, whenever I have money, I will try to put the money into electronic cash ledger. And on a monthly basis, I will use my electronic cash ledger balance for payment of the liability. Now still there is some excess, because first priority I will be using my electronic credit ledger to pay my liability. Thereafter only I will go to my electronic cash ledger. But when I take the electronic cash ledger, there is excess balance in the cash ledger. So what is that I can do? Either I can carry forward or I can get it as a refund. Yes, I can get refund from the electronic cash ledger. And at the time when there was GSTR 2-3 discussion, in the past it was automatic, but now it is not automatic. Only through refund application you need to claim it, and many people are not doing it. They are carry forwarding and adjusting because they have to wait for that refund. Because here, once you make application for refund, if they have a statutory time limit of 60 days to give that refund, after that only interest will accrue. So next month itself you have a liability. So therefore, rather than going for refund, many people will carry forward and adjust in the liability of the next months. Suppose if that cannot be adjusted in the future liability also, That is, say accountant made a mistake, so they made excess transfer thinking that the entire gross liability has to be discharged by cash. So therefore they made excess transfer, but there is ITC also. Without knowing the fact that there is ITC, they have made the payment. So even in future, we will be having ITC. So therefore, if we carry forward also, it may take 1 year to exhaust that excess balance in electronic cash ledger. Why to keep it idle? So they wanted to get it as a refund. So in that case, they can go for refund of balance in excess balance in electronic cash ledger. Number 5, refund on account of issuance of refund voucher. So this we would have studied in section 31. In section 31, while discussing various documents involved, I told you that whenever an advance is collected from the recipient, we will be issuing a receipt voucher. And when this advance is returned because the supply has been cancelled, invoice not yet generated, supply cancelled, and the advance will be returned. In case when the advance is returned, then whatever GST that we would have paid on the advance. See, GST is payable on advances in case of services, not in case of goods. So in case of services, whatever GST I paid on advance, that I will get as a refund. And whenever I give the refund, like I have to take the advance, pay GST, now I return the advance. When I return the advance, I need to give a refund voucher. Based on this refund voucher, on advance, whatever GST I have paid, I will get it as a refund. That is point number 5. Then point number 6, refund of tax on account of wrong classification. That is, treating intrastate supply as interstate supply. I have paid IGST, but what I should have paid CGST, SGST. Now, can I be okay? It's okay, fine. CGST plus SGST equals to IGST. No, I have to pay CGST, SGST, of course, without any interest, and I need to get the refund of IGST. So first I have to pay and then I should get it as a refund. So in that case, we have refund of tax on account of wrong classification. Then refund of IGST paid by a tourist leaving India. So there is a tourist refund scheme which we have studied in IGST Act. That is section 15. Whenever there is a tourist, who is called as a tourist, a person who is entering into India for purpose of stay not more than 6 months, he purchases some goods in India and he takes those goods outside India. In India, whatever GST that he has paid, he will get it as a refund at the international airport. So this is known as tourist refund scheme. For that also there is a refund mechanism. Then refund on account of provisional assessment. While discussing assessment, we discuss self-assessment and provisional assessment. In provisional assessment, what will happen? I will be paying on some basis, whatever assessing officer is telling, GST on a provisional basis, and after final assessment I will know whether I have to pay any differential GST or I need to get any refund of the excess GST paid under provisional assessment. So if I am getting excess refund, like GST paid in excess under provisional assessment compared to the final assessment, now I will get the refund of that. For getting that refund, so this mechanism is there, refund on account of provisional assessment. Then refund on account of judgment or order. That is, there is a GST officer who passed a demand for 10 lakhs of GST plus interest and penalty, and we have a dispute with respect to that GST computation, and we went for an appeal, and in that appeal they have reduced from 10 lakhs to 6 lakhs, along with that interest and penalty is also coming down. Now we would have already paid. In order to avoid the demand, and recovery procedures, what we did, we paid, because we thought, suppose if the case is not in our favor and if it is in department's favor, I have to pay unnecessary interest, so I don't want to waste that interest. So I paid 10 lakhs and then I went on an appeal. Now they have reduced it to 6 lakhs. Now I will get refund. This refund is on account of judgment, decree or order. So then I have to go for that refund mechanism. Then refund to UIN holder. What is this refund to UIN holder? What is UIN, unique identification number? I told you there are some embassies, consulates, specialized agencies of UN or international organization. These people, when they have received any inward supplies, on that whatever GST is there they have to pay, but that GST paid they cannot take it as a refund and they cannot take it as a ITC, because this particular person will not get GST-IN because their outward supply is exempted. But to get the refund of GST paid on inward supply, they will be given unique identification number. Now these people will claim refund of GST paid on inward supply. So for that separate mechanism is there. These are the 10 different refund mechanisms under GST. Now we will see the procedural aspects which are common with respect to all these refund mechanisms. First, application for refund. From point number 1 to point number 9, the refund application is in RFD 1. Whereas in case of point number 10, that is UIN holder, the refund application is in RFD 10. So RFD 1 application for refund, and in case of refund to UIN holder, it is RFD 10. And once we make application for refund, we get a acknowledgement in RFD 02. Within 15 days of filing application, if there is any deficiency, then they will give as an intimation in RFD 03. RFD 1 and RFD 10 application, RFD 2 acknowledgement, time limit 15 days, RFD 3 is what? That is intimation or a notice if there is any deficiency. Then what is the time limit for filing refund claim? Within 2 years from the relevant date. So what is the relevant date? We have in the next point, but there is a relevant date. Depending upon the situation, there is a relevant date. Whenever there is a relevant date, from the date within 2 years, I should have made the application for refund. Now, here there is one issue here. What if I made the application beyond 2 years? What if I made application beyond 2 years, which means first of all I should not make an application beyond 2 years, that is statutorily prohibited. But if someone files a case in the Supreme Court in this aspect, or if someone goes for any litigation, definitely it will be in their favor, because there are many cases in the past under erstwhile indirect taxes that once refund is not claimed within the time limit, it does not mean that they should not claim the refund. They should be given an option to file, because whatever tax that has been collected by the government, it is not theirs. When it is not theirs, they need to give refund, and you cannot restrict it by way of time limit. This is their well settled case. But that we don't have in exam. So in exam you have to write, if refund is not claimed within the time limit, refund cannot be claimed. Like that you have to write in exam. And what is the time limit here? Within 2 years from the relevant date. In case of last point, what is that? Refund to UIN holders, the time limit is within 18 months from the last date of the quarter in which supply is received. So therefore refund will be claimed on a quarterly basis. In case of UIN holders, will be claiming refund on a quarterly basis. How do we know that it is claimed on a quarterly basis? See that, see the wording. And in case of refund to UIN holder, it is within 18 months from the last date of the quarter in which supply is received. So therefore they need to take a quarter, April to June. For that April to June, whatever is the inward supplies on which GST is paid, that they need to accumulate, and within 18 months from the end of that quarter, June, so they need to make refund application in RFD 10. Now, apart from them, all others within 2 years from the relevant date. What is that relevant date? So now, depending upon the situation, I told you, apart from point number 10, UIN holder, depending upon the situation, we have to take the relevant date. So this may not be directly asked as a theory question, what are the various relevant dates, but while giving an illustration, they may add this as one point as to what is the relevant date. You need to remember and count it from there whether application is made within 2 years or not. In case of export of goods, see, like it's like big provisions, and I have just consolidated it and I have made it crisp for you to understand. In case of export of goods, date on which goods leave India. When goods leave India? Whenever let export order is passed. When goods leave India? Whenever let export order is passed. Whenever let export order, LEO, let export order passed by the GST officer, that is the date on which goods leave India. Then in case of export of services, date on which payment is received or date of invoice, whichever is later. So on advances, no, not on advances. That's why invoice is relevant. Okay, invoice raised, payment not received, payment received. So that should be taken, whichever is later. Remember that, whichever is later. And then in case of deemed exports, date on which return is filed. Now, for example, which means monthly. So I filed return for a particular month. So from there, within 2 years, I can make application for refund. In case of judgment, decree or order, I told you now in case of judgment, decree or order, we can get a refund. So from the date of the judgment, decree or order, within 2 years, we need to make application. So that refund is not automatic. So that's a valid point which we need to remember. So we will be thinking that once court passed an order reducing the GST liability, then the refund is automatic and we cannot sleep. So we need to file a refund application and then we will be getting the refund the next year. Refund of unutilized ITC. So in 2 cases we will get refund of unutilized ITC. What are those cases? Zero rated supplies and inverted tax structure. So whether that refund to be claimed on a yearly basis or monthly basis, end of that month, within 2 years from the end of that month. In case of provisional assessment, whenever tax is finally assessed, so that month, here for example, tax is assessed on March 1st, means 2 years from the date on which tax is finally assessed, not the month end, date on which tax is finally assessed. Then refund claimed by recipient. Why recipient will claim refund? So in case when recipient has paid excess tax to the supplier and the supplier has recovered that excess tax from the recipient, now recipient can claim refund, and when recipient is claiming refund, so within 2 years from the date of purchase, they need to make application. And in any other case, whatever we have not discussed, we need to take date on which payment of GST is made. So we have discussed multiple situations now. In that multiple situations, depending upon that each and every situation, we have a relevant date. From that relevant date within 2 years, but this discussion is not applicable for point number 10. Then next year, provisional refund. There is a concept of provisional refund. That is, what is the time limit within which the refund should be given? Once you make application, within 60 days, they need to give refund to you, otherwise they will be paying interest. But that 60 days is a bigger time. So to process the refund sooner for giving money to the people who have paid the taxes, there is a concept of provisional refund. But this provisional refund concept is applicable only in case of zero rated supplies. Very, very important. Only in case of zero rated supplies, not in any other case. Only in case of zero rated supplies that provisional refund is possible. And that too, how much they are going to give? 90% of the refund claim. You ask for 1 crore, they will give 90 lakhs within 7 days. Within 7 days. From when? From the date of acknowledgement. From the date of acknowledgement, within 7 days, they will give refund of 90% of whatever is the original refund claim. But this is not applicable in all cases. It is applicable only in case of zero rated supplies. And For that purpose, they will be passing a refund order and payment order. What is refund order? You are eligible for the refund, but the money should be there to give the refund. So that will be called as a payment order. So refund order and payment order. Refund order will be in RFD 04, whereas payment order is in RFD 05. Next, final refund order is passed in RFD 06. What is this final refund order? That is regular refund is in RFD 06. Whether it is provisional refund or otherwise, the refund order is in RFD 06. The provisional refund order is only in RFD 5 and payment order is always, provisional refund order is RFD 4 and normal refund order is RFD 6. But the payment order is always RFD 5. And payment advice, that is this payment order, the word payment order has been replaced with payment advice. This payment advice shall be issued in RFD 5 that needs to be revalidated if refund not disbursed in the same financial year in which refund order is passed. Now listen. Refund order and payment order. So actually they need to take the approvals for giving the disbursement of the refund. So first refund order is passed that you are eligible for the refund, but you will not be getting the refund immediately. And easily you would have experienced that in your articleship time. For income tax returns, we will be filing a refund. Majority of the cases, the two professionals, they will be getting refund because their 194J TDS will be high, na? So they will be getting refund. So in case when they are getting refund, so the refund order will be known. That is when once the assessment is completed, they will tell this much refund you will be getting. But the payment, it will take time. It depends upon the funds availability. So when they pass a payment order in a different period, different financial year, that needs to be revalidated. That's the last point. Payment advice is issued in form GST RFD 5, needs to be revalidated if refund not disbursed in the same financial year in which refund order is passed. So these are the procedural aspects related to this refunds chapter. Then possible scenarios of refund in case of exports by a registered person. So we have discussed supply of goods and supply of services. So taxability, so goods are taxable or goods are exempted. Same way service are taxable or service are exempted. For export, what are the documents required? If it is goods, shipping bill plus export invoice. If it is services, just export invoice if it is taxable. If it is exempted, bill of supply. So this is just for documentation purposes. Then option, what are the options available? I can go for payment of GST or without payment of GST. But remember, sir, I have some exempted goods or exempted services. When I export it, will it become zero rated or will it still be called as exempted? It will become zero rated. Very, very important point. I have some exempted goods and exempted services. Upon export, it will become zero rated. It will not become exempted. But I have only one option in that case. What is that one option? I cannot go for refund of IGST paid on exports. So I cannot pay GST because it is exempted. Na? How can I pay? So I cannot pay GST. So only option is refund of unutilized ITC option. So see there. So only option available in that case, that is in case of exempted. In case of exempted, the only option available to me is refund of unutilized ITC. Whereas if it is taxable, I have two options. What are those two options? Refund of GST paid or refund of unutilized ITC. So if I need to get refund of unutilized ITC, then I should have exported under bond or LUT. If I need to get refund of unutilized ITC, I need to get refund of unutilized ITC, I need to, this one, refund of unutilized ITC, I should have exported it under bond or LUT. But in case of exempted goods, we have a circular. In case of exempted goods, we have a circular that there is no need to furnish bond or LUT, but we will be getting refund of unutilized ITC. So these are this table will give you some clarity. Now, when we claim refund upon payment of GST, so two options are available in case of zero rated supplies. What are the two options? I can pay GST and get it as a refund, or I should not pay GST. Now I am taking option 1, that is pay GST, and whatever GST you paid, you will get it as a refund, that is gross GST. Who will sanction the refund? If it is goods, then that refund will be sanctioned by the customs officer. So whatever shipping bill that you file, that itself is sufficient, so no need to file a separate refund application. So that is this point. And see this, refund of IGST paid on zero rated supplies. In case of exports, the exporter may supply goods or service subject to the conditions and safeguards on payment of IGST and claim refund of the tax paid. And if it is export of goods on payment of IGST, shipping bill under bond or LUT, or in all other cases it is RFD 1. Conditions: such application shall be deemed to have been filed only when the person in charge of the conveyance carrying the export goods duly files a export manifest. That is, so if you need to get the refund, if customs officer sanctions a refund, it's okay, but when GST officer need to sanction refund, so they need to get a proof that the goods are exported. So what is the cross reference that they will make? So generally when a person in charge is taking the goods outside India, that is taken goods outside India, they will be filing export manifest. So this will be cross-checked in the export manifest or export report covered in the shipping bills or bill of export. And the applicant should have furnished valid return in GSTR 3B, and the self-assessed tax should have been paid in full. Then only this refund is available. In case of supply of SEZ also, it is the same way. Then refund of unutilized ITC, already we discussed. What is that? When we will get refund of unutilized ITC? In two cases we will get refund of unutilized ITC. Number 1, whatever that is zero rated supplies without payment of GST, or refund of unutilized ITC in case of inverted tax structure. See this, refund of ITC. Are you a registered person? No. Then the question of refund will not arise. Yes. Are you engaged in export of goods or services? Yes. Is your export chargeable to export duty? Means if you need to pay any customs duty, you will not get refund of unutilized ITC. You are making export, and check whether that is chargeable to customs duty or not. If it is chargeable to customs duty, if your exports is chargeable to customs duty, you will not get any refund of unutilized ITC. Suppose if you have already claimed duty drawback, then also you will not get any refund of unutilized ITC. That is, you exported, at the time when you have exported, you claimed duty drawback. When you claimed duty drawback, that duty drawback is to remove the tax incidence of the customs duty paid on imports. So if you have claimed duty drawback, then to that extent what you have claimed as duty drawback, you cannot claim refund of unutilized ITC. Same way, when you are exporting goods and that is chargeable to customs duty, in that case also refund of unutilized ITC not available. I am not telling that it is not export, it is export, but this refund of unutilized ITC not available. In that case, what is that we can do? Option: pay GST and get that as refund. That's the best way. That's the best way. So in that case, only one option we have. What is that one option? We can claim refund of GST paid. So pay GST, pay IGST and claim refund. Claim refund. So in that case, whatever is the ITC that you have, you can use it for payment of that IGST, and gross IGST you can get it as a refund. So that facility is available. Then now refund is given only if the amount exceeds 1000 rupees here. Suppose if the amount does not exceed 1000 rupees, there is no refund. So that is this point. Next, another case where we will get refund of unutilized ITC, I told you, inverted tax structure. So in case of inverted tax structure, what are the limitations, like when we will not get? If there are some goods which are notified by the government, in case of those goods, even if there is GST rate on outward supply less than the GST rate on inward supply, we will not get any refund of unutilized ITC. That is, generally what is inverted tax structure? GST rate on outward supply should be less than the GST rate on inward supply. Yes, it is, but those goods are notified by the government, we will not get any refund. Then, and there is no notification is there denying the refund. Next, suppose, sir, if I am selling nil rated goods or exempted goods, the rate is less than the GST rate paid on inward supply. My purchase is chargeable to GST, but my sales is exempted or nil rated. Will that come under inverted tax structure? No, no, that will not come under inverted tax structure. There should be some tax, and that does not mean nil rate or exempted. There should be some tax, and the tax rate should be less than the tax rate paid on inward supply. Then, what is the maximum refund in case of exports and in case of inverted tax structure? So, whenever I am referring to export, I am also referring to zero rated supply. Supply to SEZ is also included there. What is the refund? Maximum refund. Maximum refund formula we have in two cases. What are the two cases where we will get refund? Come on. What are the two cases where we will get refund? Refund of unutilized ITC on account of zero rated supply, or refund of unutilized ITC on account of inverted tax structure, refund of unutilized ITC on account of zero rated supply. What is the formula for maximum refund? Maximum refund equals to net ITC into turnover of zero rated supply of goods plus turnover of zero rated supply of services divided by adjusted total turnover. So simple here, on the proportion of zero rated turnover to total turnover, you will be given a refund. This logic you remember. So net ITC into zero rated turnover means what? Zero rated turnover of goods plus zero rated turnover of services divided by adjusted total turnover. Now, what is the meaning of net ITC? What is the meaning of net ITC? Net ITC equals to ITC availed on inputs and input services during the relevant period. Inputs and input services during the relevant period. There is no capital goods in that. There is no capital goods in that. Only inputs and input services. So in question, capital goods will be given. Be careful. Then what should I do, sir, if I need to get refund on capital goods? Don't go for this option. Go for the previous one. What is that? Pay GST and get it as a refund. At the time when you pay GST, even capital goods credit you can use, and whatever is the gross GST, you will get it as a refund. So whenever you have a lot of credit on capital goods, you should never go for refund of unutilized ITC. You should go for the previous option. What is that previous option? Pay GST and on exports, that is pay GST on export or zero rated, and for payment of GST, use entire ITC whatever you have and then get gross GST paid as refund. So that you should do. Then only the capital goods credit you can convert into cash. Otherwise, if you want to go for unutilized ITC, refund, only with respect to inputs and input services it is possible, not with respect to capital goods. Then, so what is the first point that you need to highlight there? Only with respect to inputs and input services, not on capital goods. Then next, minus ITC refund under Rule 89.4a or 89.4b. What is that Rule 89.4a or 89.4b? Please listen. Whenever you are paying GST on purchases, example, Patlu has paid 1200 to Motu and he gets the 1200 as a refund. He gets the 1200 as a refund. In that case, when he gets the 1200 as a refund, should that be taken into ITC? No, first of all, it will not be taken as ITC. So therefore, if it is already have taken as ITC, ensure that you are taking it out. Or else. Suppose if Motu has claimed a refund with respect to GST paid, you have not paid GST, you should not take it in the ITC. Suppose by mistake you have taken that into ITC, take it out. You should not be including it into the ITC computation. That's the meaning. Minus ITC refund under Rule 89.4a or 89.4b. Then zero rated turnover equals to turnover of zero rated supply of goods plus turnover of zero rated supply of services. Now, the way in which goods turnover we take, the same way we will not take services turnover. There is a difference in that. You can see that. Zero rated turnover of goods, what you will do, you will take the value of zero rated supplies made without payment of IGST. What if we have made supply of goods upon payment of GST? Will that also be calculated in the zero rated turnover of goods? No, it will not be calculated. Very important. What is that? I made some exports on payment of GST. I made some exports without payment of GST. Now when I claim refund of unutilized ITC, which export should be taken? The second one. Export without payment of GST, that should only be taken into the turnover of zero rated supply of goods, because in that case only refund is available now. What about the other one? Even that is also zero rated, but on that you are paying GST and you are claiming refund under a different aspect, so therefore that should not be added. So that point you remember here. Value of zero rated supplies made without payment of IGST. Made without payment of IGST minus supplies in respect of which refund is claimed under rule 89.4a and or 89.4b, that is deemed exports. That is, in case when I go for deemed exports, in that case I will claim refund of GST, whatever is paid, will that also be taken? No, that should also be excluded from the turnover. But that particular refund, supplies in respect of which refund is claimed under rule 89.4a or 4b, should be excluded from my zero rated supplies. So that's important point. Then turnover of zero rated supply of services equals to value of zero rated supplies made without payment of IGST, that is payments received during the period. Don't take payments, don't take value of invoice, payments received during the period, current period, minus advances with respect to which supplies are not made during the current period. So we received advances for the services which is to be rendered in future. You take it out. Add advances received in the previous period for which services are rendered during the current period. That should be added. So you take payments received during the current period. You take payments received during the current period, not invoices, payments received during the current period. Because in case of advance also some persons can give invoice now, yeah? So therefore, payments received during the current period for the services rendered during the current period, minus advance received, because in that payment advance will also be there for which services will be received in the, for which services will be rendered in the future period. So you take out that advances. And advances with respect to which supplies are made during the period but received in prior period. So some advances are received in the past for which we are completing services now. You take that advances and add, plus payments received for the services rendered during the current period. If there is any advances received for the services to be rendered in the future, that you take it out. Then what is the meaning of adjusted total turnover? You need to take the total turnover, from that minus exempted supplies, minus supplies for which refund is claimed under rule 89.4a 4b. So this deemed exports, whatever is the turnover, that should be taken out, because for which altogether we have a separate scheme for that purpose here. And turnover minus exempted supplies, when we take turnover, whatever is the zero rated supplies, that turnover only should be taken. So for services, whatever we computed, that should only be taken into the denominator. So this is the formula for refund in case of zero rated supply, refund of unutilized ITC in case of zero rated supply. Now we have another refund. What is that? Refund of unutilized ITC on account of inverted tax structure. And how to calculate that? Net ITC into turnover of inverted rate supply of goods or services divided by total turnover, minus already some GST would have been paid on the turnover. So if you take it out, so balance you will get as a refund. So take the ITC portion multiply with inverted turnover to total turnover minus already some GST would have paid, remaining will be called as unutilized. That unutilized you will get as a refund. But here remember, what should be taken as ITC? Only on inputs, but not on capital goods and input services. Only on inputs, not on capital goods and input services. Then, principle of unjust enrichment to apply in case of refund of claim arising out of supply of goods or service made to SEZ developer or unit. That is, generally in these cases, refund of unutilized ITC or refund on payment of GST, doctrine of unjust enrichment is not applicable. What is doctrine of unjust enrichment? That is, you need to prove that you have not passed on the burden to the next person. But now there is an amendment. What is that amendment? If you are making supplies to SEZ, even that is also zero rated, but there you need to prove that you have not passed on the burden to the next person. Please see that. Principle of unjust enrichment to apply generally in case of refund of GST paid on export, that is zero rated supplies. Second, refund of unutilized ITC. In these two refunds, you don't have to prove unjust enrichment. But in these two cases, wherever supply to SEZ comes into picture, there we need to prove that unjust enrichment has not happened. Refund of ITC not available in the following case, already we discussed: export on payment of duty and avails duty drawback. So this is about refund of unutilized ITC. We will discuss one illustration on that so that you will get a clarity. Okay friends, now we are proceeding with one illustration for computation of refund in case of unutilized ITC, and this question is from ICI questions for practice, and it's a new question. It is not asked in any past exam or not given in any RTP. So it's a new question altogether. And in this question, we have a peculiarity. Both refunds of unutilized ITC, that is export as well as inverted tax structure, both are given in this particular question. So let's start into this question. So this is chapter 15. Question number 1. So it's a new question. It was not asked in the past exam. It's altogether a new question, and even like RTP past exam, nowhere it is there. Kailash Global Private Limited supplies various goods in domestic and international markets. So they are selling both in domestic and international markets. It is engaged in both manufacturing and trading of goods. The company is registered under GST in the state of Karnataka. So the company is a registered person. The company exports goods without payment of tax under letter of undertaking in accordance with the provisions of section 16(3)(a) of IGST Act. So what is it they are doing here? They are exporting goods without payment of tax under letter of undertaking. They are exporting goods without payment of tax under letter of undertaking. Now, which means that they have only one option. What is that one option? They can claim refund of unutilized ITC only. So they can claim refund of unutilized ITC only can be claimed, but they cannot claim the another one, that is refund on payment of GST. The company has made the following supplies during the tax period. Export of product A to UK for $10,000, assessable value under customs is 7 lakhs, and is it zero rated or not? Yes, it is zero rated. It's a zero rated. It is zero rated, no doubt. Why it is zero rated? Because it is export. So it is zero rated. And which option they are going for? Refund of unutilized ITC. Can they get refund in this case? Refund not available in this case. Why refund not available in this case? Why refund not available in this case? Because we have one provision which says that if they have paid any export duty on export, if they have paid any customs duty on export, if there is any export duty is levied on product A at the time of export, then they cannot claim refund of unutilized ITC. So therefore, refund is not available. Then Even another case also refund not available, what is a duty drawback? So whenever duty drawback they are claiming, then also they will not be getting refund of unutilized ITC. So therefore refund is not available in this case. Does it mean they have to pay GST? No, no need to pay GST. See, it is a zero rated, no need to pay GST, but they cannot claim refund of unutilized ITC, means it's a loss for them, that's it. But they don't have to pay any GST. Number 2, domestic supplies of taxable product B during the period excluding tax at 5%. So what is a tax rate on outward supply? 5%. And the inputs used in manufacturing of such goods are taxable at 18%. So is it inverted? Yes, inverted. Why it is inverted? Tax rate on outward supply is less than tax rate on inward supply. Tax rate on outward supply is less than tax rate on inward supply, which means that it's an inverted tax structure. In case of inverted tax structure, whatever is the ITC, they can get it as a refund. But there are 2 cases where they will not get refund in inverted tax structure. What is that? If it is nil rated or exempted goods. Is there outward supply nil rated or exempted? No, it is not nil rated or exempted. Then next, is it covered or notified by the government that it is not eligible for refund? No, because look into the point that is given below. Not notified as product in respect of which refund of unutilized ITC shall be allowed under section 54, which means that they are eligible for refund in this case. So refund available in this case. Then third, supply of goods to EOU. See, supply of goods to EOU is a deemed export. Supply of goods to EOU is a deemed export. In case of deemed export, the supplier can get refund if they have not recovered the GST from the recipient. But what happened? You look into it. ITC has been claimed by the recipient. What does it mean? If recipient has claimed the ITC, means that it means that the recipient has paid GST to the supplier. So when recipient has paid the GST to the supplier, why supplier will claim refund? So there is no refund possible. See, first of all, I am not telling that refund is possible, but they cannot claim refund. Refund itself is not possible in this case. So there is no refund in this case. Then fourth point, export of exempt supply of goods. So that supplies are exempted. But it is exported. Then it is a zero rated. And can they claim refund in this case? Yes. So refund available in this case. So therefore, in second case and fourth case only refund is available. Second case refund available is known as refund on account of inverted tax structure. Fourth case refund available is known as refund on account of zero rated supplies. Now, the ITC available for the above tax period is as follows. So they have given the ITC details. On inputs, including 50,000 on export of exempted supplies. See, export of exempted supplies is zero rated. In case of zero rated, you can take ITC. So it's not a blocked credit. So that ITC is available. On capital goods. Then on input services, some 18,000 is given with respect to outdoor catering. Outdoor catering is a blocked credit under section 17 subsection 5. But in few cases, ITC is available. What is it? If inward supply is used for making outward supplies in the same category, or if inward supply is used as part or component of the taxable composite or mixed outward supply. So in both cases, it is not covered, and even it is not on account of a statutory obligation incurred by employer to the employee. Therefore, it will not come under ITC. It's a blocked credit. So therefore, we cannot take it as ITC itself. Determine the maximum amount of refund admissible to Kailash Global Private Limited in the given tax period. Now, this question we will try to answer. So first, we have this refund in 2 cases. Only in 2 cases refund is possible. First, refund of unutilized ITC. First refund is refund of unutilized ITC with respect to inverted tax structure. With respect to inverted tax structure. The refund of unutilized ITC with respect to inverted tax structure. What is the maximum refund? Maximum refund equals to net ITC. Net ITC into what by what? Inverted turnover. Inverted turnover divided by adjusted turnover. Inverted turnover divided by adjusted turnover minus GST payable on inverted turnover. GST payable on inverted turnover. So this is the formula for maximum refund. Now we need to know one by one. So what is the meaning of net ITC? So net ITC equals to, so generally what is the meaning of net ITC here? ITC only on inputs. Input services, capital goods, you cannot claim refund in case of inverted tax structure. So ITC is only on inputs. Net ITC is only on inputs minus ITC with respect to which benefit or refund is claimed under Rule 89 4A and 4B. That is not applicable in this case. They have not claimed any refund. So they have not claimed any refund with respect to invert supplies. So that will not come anyhow in ITC. So therefore only with respect to GST paid on inputs. What is the GST paid on inputs? 3,50,000. Have a look into that. What is the GST paid on invert supplies or inputs? Only 3,50,000. That 50,000 eligible. This 50,000 is eligible here because it is used in export of exempted supply. Export of exempted supply is zero rated, so they can take ITC. So net ITC 3,50,000. Then what is the inverted turnover? What is the meaning of inverted turnover? Inverted turnover equals to the turnover where GST rate on outward supply is less than the GST rate on inward supply. So what is that? Here 10 lakhs. 10 lakhs is the turnover on which GST rate on outward supply is less than the GST rate on inward supply. So 10 lakhs. Then adjusted turnover. What is the meaning of adjusted turnover? Adjusted turnover includes all turnovers but excludes exempted turnover. We don't have exempted turnover here. Why we don't have exempted turnover? Because that exempted supply, when you have exported, it will become zero rated, so that will not come under exempted turnover. So exempted, purely exempted turnover only should be taken. So that exempted turnover, when you have exported, it will become zero rated turnover, that will not come under exempted turnover. Therefore, we have to take all the given turnovers, because if you look into the turnover, the first one zero rated, it will come in turnover, it is not exempted turnover. 10 lakhs taxable turnover it will come, and 5 lakhs deemed exports, that is also taxable turnover. 6 lakhs, that is zero rated turnover. So all these will come under adjusted turnover. We don't have any exclusion. So if we add that, that comes to how much? Add 7 lakhs plus 10 lakhs plus 5 lakhs plus 6 lakhs. So 11 plus 7, 28 lakhs is the adjusted turnover. 28 lakhs is the adjusted turnover. Now, when we calculate refund, what is the maximum refund? And one more point also we need to calculate, that is GST payable on inverted turnover. GST payable on inverted turnover. So what is the inverted turnover here? 10 lakhs. On 10 lakhs, we need to know what is the rate of GST. That is 5%. So we have seen in the question, 5% is a GST on outward supply. So into 5% equals to rupees 50,000. So maximum refund equals to ITC 3,50,000 multiplied with 10 divided by 28, that is inverted turnover divided by total adjusted turnover, minus GST payable on inverted turnover 50,000, that is equals to 3,50,000 into 10 divided by 28 minus 50,000, that is 75,000 is the maximum refund. This is refund of unutilized ITC with respect to inverted tax structure. Next is refund of unutilized ITC in case of zero rated turnover. refund of unutilized ITC with respect to zero rated turnover. With respect to zero rated turnover. Refund of unutilized ITC with respect to zero rated turnover. What is that? Here, maximum refund equals to what? Maximum refund equals to net ITC, no doubt, same, into zero rated turnover divided by adjusted turnover. Zero rated turnover divided by adjusted turnover. Zero rated turnover by adjusted turnover. Zero rated turnover means not all zero rated turnovers. Zero rated turnovers on which we are claiming the benefit of refund of unutilized ITC. Now, what is net ITC here? What is net ITC here? In this, net ITC includes ITC with respect to both inputs and input services. ITC, net ITC here is ITC with respect to both inputs and input services. Remember here, you will get a doubt. Sir, already with respect to inverted tax structure, we claimed some refund on the same inputs. Now, can we add the same inputs even for this purpose? Yes, you can, because there is no exclusion or mutual exclusiveness given under the law, which means that nowhere it is specified, so you can take. Which means, so inputs 3,50,000, already you know. How you know? In the previous case, we have taken 3,50,000 plus with respect to input services, we should not take whatever is given as 2 lakhs. From this 2 lakhs, we need to deduct 18,000 because it's a blocked credit. So 1,82,000. 1,82,000. So that comes to 3,50,000 plus 1,50,000, 5 lakhs. So 5,32,000 will be the net ITC. Then what is the zero rated turnover? So directly we will proceed to the computation here. Maximum refund equals to net ITC 5,32,000 into what is a zero rated turnover? Remember, in zero rated turnover you need to take only that zero rated turnover on which you are going to claim the benefit of refund of unutilized ITC, and that is only one last point, fourth point. Even though first point is zero rated, but on that you are not claiming any refund, so only the last point should be taken, that is 6 lakhs into 6 lakhs divided by adjusted turnover. What is adjusted turnover? So fully we should take. What is that adjusted turnover? Already we know 28 lakhs. So that 28 lakhs we need to take, that is equals to, so 5,32,000 into 6 divided by 28. That is 1,14,000 is the refund. So what is the total refund? This 75,000 plus this 1,14,000. This is the total refund. So this explanation you need to give in detail. So let's see how the answer they have made. So we got the answer 75,000 and 1,14,000. So this is the answer. But notes, first point. So it's a zero rated turnover, but refund cannot be claimed. Why refund cannot be claimed? Because on which export duty is paid, refund of ITC is not available. Like that you have to write. Then for the second note, formula, complete explanation, maximum refund equals to net ITC into turnover of inverted rate divided by adjusted total turnover minus tax payable on such inverted rate supply of goods. Net ITC means what? Adjusted total turnover means what? So total turnover excludes what? Two turnovers, exempt supplies other than zero rated and turnover on which refund is claimed under rule 49, 89 sub rule 4A, 4B. So that one. And relevant period is the period for which we are claiming refund. So that month. Net ITC, maximum refund. So we got. Then note 3 is with respect to export oriented unit. Supply to export oriented unit. So that's a deemed export in that they have not claimed any refund because the recipient is eligible to take ITC. So that data you need to write. And fourth point, turnover which is zero rated on which we can claim the refund. So that formula along with that computation. Okay. Next. This is with respect to the illustration which I was referring to, and all other questions given in this is RTP and past exam questions. So only one question is a new question. Only this question number 1 is a new question. All other questions are RTP and past exam questions only. But we are just discussing that to understand the concept. Already you might have done, but for the sake of repetition, I am just repeating this. Super engineering works, a registered supplier in Haryana, so it's an RTP question actually, is engaged in supply of taxable goods within the state. Given below are the details of the turnover and applicable GST rates of the final product manufactured by super engineering works, and also the input tax credit availed on inputs used in manufacture of each of the final products, and GST rates applicable on the same during a tax period. So product A, product B and product C, 3 products they have given. 3 products turnover, GST rate on outward supply, GST rate on inward supply is given. And determine the maximum amount of refund of unutilized input tax credit that super engineering works is eligible to claim under section 54, provided that product B is notified as a product in respect of which no refund of unutilized ITC shall be allowed under the said section. Now, product A is inverted or not, you check. Product A, output is 5%, input is 18%. Yes, it is inverted. Product B is also inverted, but they cannot claim refund because product B is notified by the government, so which means that on that they cannot claim refund. Product C is not inverted, it's a parallel stack structure, 18%, 18%, so it's not a inverted, which means only in one case they can claim refund on account of inverted tax structure, that is product A. With respect to product B and C, they cannot claim any refund. Now, with respect to product A, how much they can claim? Already we have understood that in the first illustration itself, the formula and the explanation. Net ITC into inverted turnover divided by adjusted turnover minus GST payable on inverted turnover. Now, first we will take net ITC. What should be taken as the net ITC? Should we take the net ITC means only ITC pertaining to product A, or we should take the total ITC? We should take total ITC. We should not take only the ITC pertaining to product A. We should not take ITC pertaining to product A. We should take the total ITC, that is 54,000 plus 54,000 plus 10,000, that is 1,18,000 should be taken. So see here, net ITC we should take 1,18,000. Why we should take 1,18,000? The formula is what? Net ITC, ITC availed on inputs during the month. So even if some of the inputs are not coming under inverted tax structure, that should also be taken. So total 1,18,000 into inverted turnover. What is inverted turnover here? Only 5 lakhs is inverted turnover. What about 3,50,000? Even though it is inverted turnover, but on which you cannot claim any refund because it is notified by the government. So numerator is 5 lakhs. So 1,18,000 into 5 lakhs. 1,18,000 into 5 lakhs divided by adjusted total turnover. We have any exempted supply in this? We don't have any exempted supply. So add 5 lakhs plus 3,50,000, 8,50,000 plus 1 lakh, 9,50,000. 9,50,000 minus inverted turnover into GST payable. What is the inverted turnover? 5 lakhs is the inverted turnover. On that, what is the GST rate? 5%. So 5 lakhs into 5%, that is 25,000. So whatever the balance that you got is the refund that they can claim. So it's a pretty simple question. Only twist is that many students will take this ITC alone as net ITC, but they should take the entire ITC as the net ITC. Don't forget that. That's a speciality in this question. Then question number 3, with reference to section 54 subsection 3, mention the cases where refund of unutilized input tax credit is allowed. So it is also one, I think RTP question only. And with reference to section 54 subsection 3, mention the case where refund of unutilized ITC available. That's what we have discussed so far. What is that? Zero rated supplies made without payment of tax and accumulated ITC on account of inverted tax structure. Then, so this is a past exam question. State the cases where refundable amount shall be paid to the applicant instead of being credited to consumer welfare fund. That is, there is a concept called as refund subject to unjust enrichment. What does it mean? You should prove that you have not passed on the burden to the next person, then only that will be given to you. But this we don't have to prove in few cases. In few cases, we don't have to prove. What is that? In case of export, either on payment of GST, export on payment of GST, but supply to SEZ, we have to prove. Export on payment of GST, we don't have to prove. That is the first point. Export on payment of GST. Then, refund of unutilized ITC. In that exports and inverted tax structure, what if it is supplied to SEZ? We have to prove. Then, point number C. So, first one is what? Export on payment of GST. Number 2, refund of unutilized ITC, not on account of zero rated, on account of export and inverted tax structure. If it is on account of supply to SEZ, then they need to prove. Next, point number C. Refund of tax paid on supply which is not provided either wholly or partially. That is, we discussed now refund voucher concept. So, in case of that refund voucher concept also, no need to prove unjust enrichment. Then, intrastate supply treated as interstate supply, wrong classification. In that case also, no need to prove. So, I am just writing export on payment of GST, export on payment of IGST, then refund of unutilized ITC, then here refund voucher, then wrong classification, or has not passed on the incidents. That's general situation. If you have not passed on, no, like tax and interest, if any or any other amount paid by the applicant, if it has not passed on the incidence of such tax or interest, then it will not be credited to Consumer Welfare Fund. Actually, it is like no need to remember that unjust enrichment is applicable or not. In the first 4 cases, unjust enrichment is not applicable. So, money will not be credited to Consumer Welfare Fund. And in all other cases, if you prove that you have not transferred the burden, then also it will not be credited to Consumer Welfare Fund and refund will be given to you. Or the tax or interest borne by notified class of persons, that is when recipient is claiming refund. When recipient is claiming refund, in that case also no need to put it in the Consumer Welfare Fund. So, this is a theory question. Next one here, question number 5. Y Limited provides the following details of September. It is also one exam question. For computation of refund claim under Rule 89 Sub Rule 4 of the CGST rules, compute the eligible claim under the said rule assuming the other conditions are fulfilled. Opening balance of ITC 5 lakhs. ITC availed during the period which includes the claim for refund made of 5 lakhs eligible under 89 4A 4B. So, include. So, from 25 lakhs you need to take out 5 lakhs. So, we should take in net ITC only 20 lakhs. In net ITC we need to take only 20 lakhs. Zero rated supply of goods made during the period without payment of tax under bond or LUT means refund of unutilized ITC, which includes supply of 1 crore for which refund is claimed under Rule 89 4A 4B. So, that should also be taken. So, which means this should be taken as 5 crores because that 1 crore should be taken out. Supply of goods other than zero rated supply of goods 3 lakhs. So, total turnover will be 8 lakhs. This 5 lakhs plus 3 lakhs 8 lakhs. So, very simple pa. 20 lakhs is the refund. Why we should not take opening balance? So, we should take ITC availed during the month. So, we should take 20 lakhs net ITC into 5 crores zero rated divided by 8 crores. Simple. We got the answer. Then question number 6, so that's also a past exam question. Y Limited exported service valued at $1 lakh. Supply of service was completed on 15th November 2019. So, supply of service was completed on 15th November. Payment for this service was received on 30th December. Refund claim was filed by Y Limited in respect of tax paid on inputs and input services for 6 lakhs on 31st January. The refund claim was sanctioned on 30th April. What is the amount of refund Y Limited will get in accordance with the law? What is the relevant date and rate of interest? First. So, it is export of service. In case of export of service, what is the relevant date? 2 years from the date of invoice or payment received, whichever is later. So, when they have received the payment, supply is completed on 15 November, payment was received on 30th December. So we need to count from 30th December because date of payment received. So invoice date we don't have. So date of payment received. And that date, within 2 years, they should have filed the refund claim. So what is the relevant date? 30th December. So 2 years, December 2019. So 2 years from the date they should have made the application. When they made the application on 31st January 2020 is within the time. And whenever they make application, the refund should be sanctioned within 60 days. So when the refund is sanctioned here, the refund was sanctioned on 30th April. So 31st January they made an application. Now February month, March month. So February month, let's take 29 days because it's 2020, and March 31, exactly 60 days is March 31, but they have given refund on April 30. So for 30 days, they need to pay interest at the rate of 6% per annum. See that? So since in the given case it is not refunded within 60 days, so interest at the rate of 6% per annum is payable after the expiry of 60 days. So in this case, you can even compute the refund interest also and you can calculate and show. So this is about the questions what we have on refunds. Now, in this concept, so we have already completed situation 1, refund upon payment of GST. Situation number 2, refund of unutilized ITC. Situation number 3 is deemed exports. Deemed exports, already I have discussed to you the benefits. Now we are discussing what are considered as deemed exports. Remember, supply of goods only will come under deemed exports, supply of services will not come under deemed exports. So what will come under deemed exports? Only supply of goods will come under deemed exports. The following supplies are notified as deemed exports. If you look into that, you can see goods, capital goods, supply of gold, which means whenever you are coming across deemed exports, it will be only for supply of goods. For supply of services, we don't have the concept of deemed exports. Then 4 categories. Number 1, supply of goods to a person who is holding advance authorization. Advance authorization is a concept which we will be coming across in foreign trade policy. What is an advance authorization? Listen here. I am an exporter and I want to import the goods without payment of customs duty for using it in export. I am an exporter and I wanted to purchase, that is import goods without payment of GST. So I can go for advance authorization. On advance authorization, if I don't have to pay any customs duty at the time of import. That is the benefit of advance authorization. Now I have also the facility to locally procure without payment of GST. That's what deemed export is. I have the option of what? Locally procuring without payment of GST. So that's the concept of deemed export. So when I locally purchase from you without payment of GST, so that's a benefit. I have advance authorization. Now I cannot pay GST to you. So you cannot recover GST from your option 1. So then you will get refund of whatever GST that you have paid. Remember that motu pattu example. Then second, I am a holder of EPCG, Export Promotion Capital Goods Scheme holder. Like how I can import the raw material without payment of GST, I can import capital goods without payment of GST. Like how I can import raw material without payment of GST, I can import capital goods without payment of GST. So this capital goods, when I am importing without payment of GST, alternatively I can purchase locally without payment of GST. So when you are supplying goods to me, capital goods to me, it's a deemed export for you. So what is the first deemed export? Supply of goods to a advance authorization holder. Number 2, supply of goods to a EPCG holder. Number 3, supply of goods to an EOU. Already we discussed that in the illustration. Number 4, supply of gold by a bank or public sector undertaking under advance authorization. That is, there is a public sector undertaking which is having advance authorization. Then supply of gold by a bank or PSU against advance authorization. So therefore, there is one person who is exporting gold and he is having advance authorization. And to that person, when a bank or PSU is selling gold, that will be called as deemed export to that bank or PSU. Now, surveys are not specified under deemed export. So, about explanation of advance authorization, EPC, GEOU, everything I have given below. Now, what are the two benefits? Benefit number one, supplier will supply the goods, will collect only sale price without GST, but the GST they will pay to government and they will get as a refund. Now, can recipient avail ITC? No, recipient should not avail ITC on inward supply, and recipient shall furnish undertaking that supplier can claim refund. In this alternative, even blocked credit to the recipient, refund can be claimed. So they will not see whether it is a blocked credit or not to the recipient, so supplier can claim the refund. Alternative 2 is what? Supplier will supply the goods and will recover price plus GST, and the GST will be paid to government, and from that government recipient will get a refund. But in this case, remember, it should not be a blocked credit to the recipient. If this is blocked credit to the recipient, they will not get refund. Recipient shall avail ITC on inward supply. However, such inward supply should not be blocked credit under 17 subsection 5. Refund shall be claimed by recipient in terms of Rule 89, 4A or 4B. And once they claim that refund, they should not be taking it into ITC even if they have not taken. So the best practice is that usually they will not take ITC, they will claim for refund, and if they don't want to claim refund, means they have paid GST, then they will be taking it as ITC. That's what I explained in that Motu Patlu example. Then situation 4, refund to UIN holder. What is that we discussed? That is, there is a supplier, that is, there is a person whose outward supply is exempted, that is UN organizations, specified international organization, embassies, consulates, etc., and their outward supply is exempted. And now they are making inward supply, either they can import or they can make local purchase. On that, they have paid GST. That GST paid, they cannot take as ITC, but they can get it as a refund. See the first scenario, supplier is outside India, is supplying goods to this UIN holder. They will pay customs duty along with IGST to government and they will get refund of IGST. Customs duty refund they will not get. Same way locally they are purchasing. So one person local, he is supplying goods or services to these people and they pay price plus GST, and that supplier will pay GST to government, and from government they will get as a refund. And for that already we discussed, refund form is RFD 10, application for refund RFD 10 and acknowledgement RFD 2, and refund application should be filed within 18 months from the end of the quarter. And here no refund if the value of the invoice does not exceed 5,000. If the value of the invoice is less than 5,000 excluding tax, see here not refund, it's not refund less than 5,000. It is the value of the invoice. If it is less than 5,000 excluding tax, then they cannot claim any refund in this case. So that's an important point here, that invoices should not be taken into refund application itself. And the refund order will be passed within 60 days, otherwise interest will be applicable. That is this. And we have one amendment. What is that? Refund allowed to retail outlets, established in the departure area of the international airport. So this is not tourist refund scheme. It's altogether a different refund. There is a shop in international airport. Or called as a retail outlet, and that will be of two types here. Duty paid stores and duty free stores. Duty paid stores and duty free stores. What is duty paid stores means? They would have imported the goods and they would have paid customs duty and they will be selling it in the international airport. That is duty paid stores. Duty free stores means they will import goods and they will not pay any duty and they will be selling it in the international airport. So there is a retail outlet in the international airport. Try to remember that first. There is an airport. In that airport, which airport it is? International airport. In that international airport, there is a retail outlet, and that retail outlet can be DPS, DFS, duty paid store or duty free store. Now, because it is a duty paid store or duty free store, it does not mean that they should always import. They may locally also purchase. So they are purchasing locally some goods from a supplier and is selling it in the duty free or duty paid store, which is in an international airport, retail store in the international airport. Example here. This lot of international airports will be having this something called as bookshops or gift shops, etc. These people will be purchasing some goods within India, and when they purchase, is it anywhere given as a deemed export or exempted? Nowhere it is given as exempted. So it will be chargeable to GST. So that supplier will be collecting GST from the retail outlets. No doubt in that. So there is a supplier who is making supply to that retail outlet, will be recovering price plus GST, and they will pay GST to the government. But these retail outlets are making supply to a tourist, so that is exempted. Therefore, they cannot take ITC and they will get a refund of GST paid on inward supply. See that. So supply of goods to the recipient. Who should be the recipient? Outgoing international tourists. Outgoing international tourists should be known as a recipient, that is exempted. Logically, when it is exempted, they cannot take ITC on inward supply. That's why they will be given refund. So that is about this. So if you can remember this diagram, that's sufficient. And tourist meaning, you should know that they stay in India for a period not more than 6 months, and they should be taking these goods outside. That is, they have purchased in the retail store in the international airport. And these retail outlets making tax-free supply of indigenous goods to an outgoing international tourist are entitled to claim refund of applicable GST paid on inward supply. Then we have some conditions regarding this. Who is eligible for refund? Already we discussed. Application for refund, they have to make application for refund in RFD 10B on a monthly or quarterly basis, depending upon their return filing. And conditions for claiming refund: the inward supply of goods were received by the said retail outlet from a registered person against a tax invoice, normal, otherwise they cannot claim. And very important, when they are selling it to a tourist, they should collect the money against foreign exchange, which means they should not collect in Indian rupees, they should collect in foreign exchange. So therefore they should insist on international credit cards. Name and GSTN of the retail outlet is mentioned in the tax invoice for the inward supply, and such other restrictions, means it should be B2B supply. So whatever invoice given by the supplier, that outlet GSTIN should be there, means that outlet should have obtained GST registration number. And this information is for your general knowledge. I told you, duty free shops and duty paid shops. So in both cases, this concept, whatever is there, that will be applicable. Then, so this analytical chart already we have discussed. So with this, we completed the revision lecture related to refund. Now we have 2 more videos left. That is, the next video will be on advance ruling and appeals, that we have not discussed, and with that GST will be completely over. Thereafter, the last video, that is on foreign trade policy. With that, again, the entire indirect tax component will be over. So with that, the revision lectures, whatever is being given, promised by me that I will be giving it to you, I have given. When it comes to customs, I have not given just the revision lecture, but I have given the content from my main lecture itself. That is, usually I will take this something called as comprehensive revision batch, and in that batch whatever I have taken, so because I don't want to reduce below that, and time was also not available for me, so therefore that same content I have given for the benefit of the students. Not much, so it is lesser and only information, and the related notes is already there in this That's It book. You can refer to that. But foreign trade policy I will take. Even this appeals and advance ruling also I will take. With the 2 more videos, the entire portion will be completed. And as the exams got postponed to August, I am also planning for And luckily this time when the exam is conducted in August, we have 2 days holidays after direct tax exam to indirect tax exam. Now, what is that you need to do? This entire revision lectures, I don't think so that it will go beyond some 35 to 40 hours. So it is within 40 hours only. This 40 hours you revise here. 40 hours if you need to revise. In a day, if you spend 4 hours, you can completely revise. I don't think so. 40 hours is also there, and you can revise this hardly in some 5 to 7 days. You can completely revise it. So that try to revise it now. Those 2 days you leave it to me. I am planning for a complete revision, last minute revision, that before exam 2 days we have holidays, and on the 2 days I'm going to revise you the entire concept, either in the form of a YouTube live or some way. I'll try to do it for you, and I will be open for doubt clarifications also. So therefore that particular point is rest assured, and that is on me, and you don't have to worry about that. And with this you can definitely complete this indirect tax with flying colors. And please pass on the message to the next batch students that for November attempt already the video lectures are made available, and for those who are appearing for November 20 video lecture students and our students, amendments, all amendments I have compiled, and those amendments videos also will be released sooner in this YouTube channel. And whereas if they want to purchase full lectures also, they can start purchasing. And for May 21 also, the lectures will be made available from July onwards for May 21 students. So thanks a lot, and please share this and make others also to subscribe to my channel.